is this a bull market or a bear market for stocks? And if stocks are going to go down, although Trump is saying stocks are going to go up for years and years, and Tom Lee of Fundstrat, hedge fund manager, well-known, is also saying that stocks are just going to keep going up for multiple years. So we're bullish, but if we're not, and who's saying we're not? Well, let's take a look at that as well. But if we're not, should I be buying gold or should I be buying Bitcoin? Let's deal with that in this episode. To get all our episodes, to get all our topics, we have Bitcoin topics, we have altcoin topics, we have stock market topics, and we have fundamental macroeconomic topics. Go to bitcoin-price.co. It's a new website, so I had a hard time remembering it. Bitcoin-price.co, and you'll get a link to all of our videos. Instead of just jumbling it all up into one channel, we decided to make 4 different channels. This is what most people are saying. Stock market forecast. Stocks rise on trade negotiation optimism. And it'll keep going up for years and years and years is what everyone's saying, because China and Xi Jinping and Trump and all this. But there's very few people saying, is the bull back or is it a bull trap? There are very few people asking this question. This is from Seeking Alpha if you want to look it up. And I'm here to tell you, stocks aren't going to go very far. They can't go very far. We're going to get into a recession. And it'll be pretty quick. In fact, the more you hear the Fed saying, hey, we're going to ease up, the more you hear politicians saying, hey, we're going to end up with the most bullish year of all, that's when you know that everyone's lying to you. Remember, the news is out there designed to take your money. Nobody sits there and designs news so that, you know, let's make news so that everybody else gets rich. Nobody does that. The news is used to manipulate you out of your money 97% of the time. And right now, everyone's saying, hey, stocks are fantastic. You should buy stocks. Let's see what they're actually doing. And should I be buying gold right now or Bitcoin? Now, for the purpose of this video, I'm going to leave out the reason why stocks are going to go down. Stocks are going to go down. And I'm going to leave that out because it's already done in another video. The other video is available at bitcoin-price.co. Go to bitcoin-price.co. I give you all my reasons. I give you all the charts and all the historical. It's pretty clear. Stocks are just going to plummet and we're going to run into at least a semi-recession, if not a full-blown recession. So bitcoin-price.co is where you get that video. Now, assuming that you've seen that video now and you're done with that video and you've digested the fact that, yeah, okay, stocks look bad, equities markets look bad, I'm just going to sell everything off because this last thing was a bull trap. In fact, you know, I'm not going to get into it. There's more I wanted to say, but let's just leave it there for now. So now the question is, should I buy gold or should I just be buying Bitcoin right now? Anyway, here it says gold demand tipped from just 1% in 2018, metals focus. Okay, London. Gold demand will change little this year from 2017 levels as slim gains in physical investment in jewelry and industrial demand are partially offset by a drop in central bank buying to its lowest since 2010. There's a huge drop in central bank buying of gold from like 10 years ago. Hasn't been lower in 10 years. This is like the 10-year low. Moving on. Central bank buying is expected to slip 6% to 350 tons. However, okay, an 8-year low. Well, from the time of this blog, it's been 10 years now. A 10-year low. Expected to slip more. Another 6% to a 10-year low. Less gold. Everyone's going to buy less gold. There's less demand. And this is at a 10-year low is what everyone's saying. All right, when was that? That was April 4, 2018. April 4, 2018. Remember April 2018. Not even a year later. Not even a year later. February 2019. Oh my God. I'm just embarrassed to show you this. This is Seeking Alpha, okay? Just, again, central bank gold demand spikes to nearly highest level nearly 50 years. 50 years. 50 anni. Come on. This is 50 years. 50 años. This is like 50년. This is the highest amount in gold demand. Central bank? Jamie Dimon, once called Bitcoin a fraud, but now he's leading Wall Street's push into cryptocurrencies. Dimon-led banking behemoth JP Morgan Chase will reportedly start issuing Bitcoin like digital currencies called JPM coins. JP Morgan coins. Nobody sits there making news designed to make you rich. The news is out there it's just designed to take your money from you. Okay, so we're still left with the key question. All right, so if stocks are going to go down because of that video that we proved stocks were going to go down and we're going to enter into a recession, then should I be buying gold or Bitcoin? Now let's get to the meat of it. This is where you go to get actual real stats, down to the ounce. Gold Hub, gold.org. All right, gold demand trends, full year Q4 2018. Let's look at the subheader. Annual gold demand gained 4%, the highest central bank buying in 50 years. This is where that number comes from. Let's take a look at the distribution. And this doesn't show you year over year, like 2017 compared to 16 compared to 15, but it'll show you. Let's dive into these highlights to see what's really happening in here, okay? Highlights. Okay, central banks added this many official gold reserves in 2018, right after all the news told you that, hey, gold's going to take a nosedive. Okay, annual jewelry demand was virtually unmoved. Interesting. ETFs and similar saw inflows down from this much. So, okay, so there wasn't much annual jewelry demand. ETFs and investments were actually down. Okay, that's weird. Okay, retail investment in gold bars and coins posted annual growth of 4%. Interesting. 2018 saw marginal gains from volume of gold used in technology, crimped by Q4 slowdown. Wait, does that make sense to me? Does that make sense to you? So retail investment in gold bars. You know what this is? This is actually people that are gold bars. These are people trying to leave their country. These are people doing money laundering. These are people that are just really, really smart investors just buying gold bars and coins. Is up 4%. And central banks up, where was that? Anyway, central banks up a lot. So you can almost say these are central bank employees buying, buying gold bars here because their companies were buying gold bars here. Nobody else, jewelry, not buying gold bars. ETFs, the retail market, on stock markets through ETFs, not buying gold. Retail investment, only buying gold. Central banks, only buying gold. And volume used in technology, not buying gold. Do these guys know something? Do the central bankers and the employees that work in the central banks know something you don't? Before we move on, I want to really just drill this in and highlight something. Central banks buying gold, total bar demand, and technology and jewelry and ETFs. What's interesting here, you have to know this. Central banks buying gold, this is speculative. They're buying with no actual real intrinsic purpose. Total bar and coin demand, same thing. They're just buying on speculation. Technology, now this is interesting. This is real actual demand. People are actually buying things with gold in it. You know where gold's used most? Jewelry, this is like discretionary demand. Do you see what I'm saying? This is discretionary demand in so much as you don't have to buy gold jewelry. You can buy, I don't know, other types of colored jewelry, other types of metals. It doesn't even have to be metals. It could be other things that aren't absolutely necessary in day-to-day life, but your cell phone is. Your notebook is, your laptop is, your computer is, your electronics in your car, your circuit boards are, your microchips are, your RAM chips are. This is pretty much necessary, but this is the only thing that's necessary in life, and everybody else is buying gold against this. Now remember that, okay? This is the only category that's absolutely necessary in life of all the gold buying categories, all the gold demand categories. Apple iPhone sales in China fell by 1/5 in the fourth quarter. iPhone sales crashed nearly 20% in China because Apple charges too much. Apple shipments fell 19.9% in China during Q4. Apple reported a 27% decline in revenues from China late last month. Samsung sees biggest smartphone sales decline since Gartner started tracking it. We peaked, guys, in 2014. 2014. That's 5 years ago we peaked. Ever since then, we've just been doing do. Now let's look at shipments in tablets, laptops, and desktop PCs worldwide from 2010 to 2022. This is going to be an estimate, obviously, because we're in 2019 right now. What's happening here? Again, magic number, 2014. Magic number, the year 2014, we start going down. This looks really bad though, doesn't it? Way worse than just Samsung. Well, what do we have here? This is gold. This point where gold price was cheapest in the last, 2 decades is, guess what year? 2015. 1 year after we started selling less computers. This only goes up to 2015. I'm sorry, I couldn't find a better chart for you. And I don't have time to make you a better chart, but basically, gold price went down when computers stopped selling. That's dumb. That doesn't make any sense. So you're telling me that computers and electronics, even though they only occupy what, 2, 3, 4, 5%, a tiny, tiny little percent of the world's total gold demand, literally just tiny electronics and computers and consumer goods only occupy such a tiny little portion of the entire world's gold demand. And you're telling me that when PCs stopped selling, gold price went down, and when PCs, so that means that the inverse should be true, right? If PCs really sold a lot, then gold price should have hit all-time highs, right? I mean, come on, that'd be ridiculous, wouldn't it? Here's gold again, and that's ridiculous. Again, this is all-time high for gold, as you can see, and we have August 2011. August 2011 was all-time high for gold, and remember, 2015 was all-time low for gold. 11, 15. 11, 15. Yeah, but inverted head and shoulders, and yeah, but gold and stocks, and yeah, but Apple warns Q1 results. Apple phone sales revenue fell 15%. Apple lowers holiday quarter guidance. Apple's growth attraction to non-iPhone revenue. This is interesting. Apple makes rare cut to sales guidance. Letter from Tim Cook to Apple investors. Hey, reduce our revenue guidance. Remember I told you that in that last chart, well, a couple minutes ago, only technology was indispensable. Only technology was necessary. It was a necessary gold consumer. Banks buying, gold bars buying, gold coins buying, and jewelry, they're all, well, banks, bars, and coins are speculative, and jewelry is discretionary. The only category in which gold is absolutely necessary is technology. And technology is going down. So what does that mean with gold right here that looks like it's going to go up? Retail sales in China. Hong Kong, China stocks fall dramatically, slump in U.S. retail sales. S&P 500 snaps 4-day winning streak after worst retail sales drop. Dow ends sharply lower on surprise drop in U.S. retail sales. Forex today, softer risk amid China prices, trade talks. Terrible U.S. retail sales appears dollar gain as weak China inflation hits. What I'm telling you is that the facts remain that the only actual real intrinsic value of gold right now is electronics and manufacturing. Everything else is either discretionary or it's speculative. So what ended up happening in the 1980s and 90s that made gold prices just keep going? Electronics. So because electronics are just going to, your Sony Walkman, your big fat Dell PC that weighs 50 pounds, you know how much these big fat circuit boards and these big fat RAM chips and these big fat CPUs that had to be big and fat because there wasn't any precision back then. You know how much gold they used? They used a ton of gold. And so the bankers, the smart guys, the bankers are always the smartest guys, right? They're smarter than rocket scientists. They're smarter than politicians. They saw this happening. So what they did was they bought up all the gold because they were going to sell it to the manufacturers. They're going to sell it to IBM. They're going to sell it to Apple. Then they're going to sell it to Sony and Fujitsu and all the manufacturers because they control the gold supply. That's what they did in the 80s and 90s. Now, everyone thinks, what everyone thinks and misunderstands, this is a major misunderstanding. Everyone thinks that, well, if the economy goes bad, people hedge into gold, right? Because gold is a reserve store of value. It's not. It's not anymore. I mean, what do you think this is? The 1600s with Spanish galleons, or was that 1400s? It's not anymore, guys. Come on, nothing's based on gold. You know how stable gold is? Maduro decides, hey, let's feed our people. And so Bank of England, hey, here's a bunch of gold, just hold on to it. And can I borrow some money? And guess what? They decide, let's just give it to... No, you can't have your gold back. Yeah. He lost... An entire country lost all their gold just because the Bank of England decided not to give it back to them. Gold, a trusted store of value? No. So the only reason you buy gold now is because you're speculating that industrial demand, actual intrinsic value usage demand is going to go up. And it's been going down ever since 2015. Yeah, but as the future goes on, we're going to go less industrialized and more electronic. Right? We're going to have more electronics and not less. Yeah. But have you seen the sizes of these Dell computers that weigh 50 pounds? How much do they weigh now? You see these chips and these memory RAM chips? You see these storage devices that 1 terabyte? What's a terabyte? Used to be 100 megabytes you could get on a zip disk. Everything's shrinking, guys. So even if you're going to put computers everywhere and circuit boards everywhere, they're going to be so small they're not going to use hardly any gold. And then for the guys that are going to ask, well, but what about jewelry? Jewelry's demand, yeah, it's discretionary spending, number one. Number two, why would you discretionarily spend something that's a lifestyle luxury product designed to signal your wealth on a depreciating asset? In other words, back in the 80s and 90s, you wore these big, gaudy gold chains because the price of gold kept going up. That was for you to signal to the world that, hey, I can afford this, and I'm getting richer by the day, bitch. I'm going to have to edit that out. But when there's no demand for gold on the industrial side, when there's no social infrastructure demand for gold, then the price of gold is going to keep going down, and you're going to be wearing and buying something that looks yellow, that signals that you're losing money every day. Ain't going to happen. So this is what we're thinking might happen. If just based out of habit, the stock market just ends up going really bad and we end up in a recession, just out of habit, without really understanding the underlying needs of civilization and money, the dynamics of money, gold might just get bought up to here. And that gives us about a year. That gives us just about, actually not a year, that gives us about a year and a half. That gives us about a year and a half for us to, everybody to buy gold and then realize that no one's buying it from us. The greater fool stops here. And right when everyone realizes, holy scruples, gold's, no one's buying it, and it should drop right back down to around here. And this is just super rough, right? This is super, super rough. It may not even get up this high. It may only hit this resistance mark and just get up about this high before it drops down. But there's really no industrial demand. There's no technological, there's no civic, there's no infrastructural demand for gold right now. And so it's, no one's going to want to put it on their body, and no one's going to put it in their mouth for dentistry, which is another major use. All right, so if not stocks, and we actually move into a recession, and if not gold, then what's left? Bitcoin. It's the only thing that's left. Society is changing, guys. Technology is changing, morphing everything. Okay, wait. I don't want Bitcoin. I'm just for some reason categorically, morally against financial independence and wealth. I hate money, so I'm not going to buy Bitcoin. Okay, okay, that's fine. If you still want to buy some stocks, we've got some stock picks for you that look fantastic. Not nearly as good as Bitcoin, but they're going to do really well. To get those stock picks, it's in a different YouTube channel. I'm not going to give you stock picks on this YouTube channel. That's at bitcoin-price.co, bitcoin-price.co. If you have any questions, you want to contact us, you can talk to us at bitcoin-fund-manager.com, bitcoin-funds-manager.com.